Welcome, everybody, to the Investing or Gambling Podcast. I am your host, Ileana Mike, and I'm here with my old co-host and reliable friend, Dow30k. How are you? Welcome back.
Hey, I'm doing good. How are you?
Good to see you back. Dow 30 is back for a show tonight, folks. The Dow Jones Industrial Average sitting at 34,292. The NASDAQ is sitting at 14,528. And the lovely S&P is sitting at 4,291. Our Russell 2000 is sitting at 2,308. It has been an absolute smoke show, folks. The market is on fire. It's throw a dart, see where it goes. We got the Fed pumping. We got inflation fears seemingly non-existence. We'll talk about that in the show. We got the 10-year bond sitting at 1.48. Gold is taking a little bit of a leg down. Silver is taking a little leg down, and the commodities have come down also. What does that mean? We will talk about this tonight in our show. Welcome to the show, Colin. What do you think's going on in the market? How you've been doing? What have you been buying? What have you been holding? Tell us a little bit about your market experience, since this is the man that thinks nothing more than about money. Let's talk about it. What do you think, Colin?
Yeah, and long-term investing.
Absolutely. He's buy and hold king here.
Yeah, so the best part about not doing the podcast weekly like we used to do is that I don't have to pay attention anymore. I don't have to pay attention to CNBC every day. I don't have to pay attention to the VIX. I don't have to pay attention to many things because I am focused on just enjoying my summer and, reading some investing books that I've always wanted to read and never had the time.
Yeah.
And, that's the difference between investing and gambling, I think, which is the name of the show, is that I'm a long-term investor. All the stocks that I purchased within the last 6 years were stocks, or maybe 8 years, were stocks that I always planned to hold for 11 years.
Right.
Why do I say 11 years? Because there's always a chance of a lost decade. So I always add that 1 year in for fun.
Well, that's pretty good philosophy. I mean, you've always been the type of guy that doesn't want to hit the home runs. You just assume just buying and holding and reinvesting your dividends. And when you see a dip, if you've got money laying around, you'll go ahead and purchase those shares back to dollar cost average. Am I pretty much right about that's the way you've been investing?
Yeah, definitely. And sometimes I put like my own spin on it. And I can get a little contrarian. That's like a bonus thing that I'll do. I don't suggest everybody invest that way, but I do like to buy when people are saying don't ever buy that industry won't come back, or that stock's never gonna see another good day again in its life cycle. So sometimes I will take a stab at those type of companies or industries. For example, during like the COVID sell-off, not only was I buying stocks I always wanted to own, but I also took a stab at like the REITs. Remember, I think we did a show with David and you and I, and why would anyone be buying REITs
right
during March of 2020? I mean,
No.
You would have to have your head examined if you were doing that. But knowing that I still thought that commercial real estate would come back, and those dividend yields were kind of doubling from maybe a 3% yield to now a 6% yield, I was taking advantage of that. I took an entry position. I turned on the drip to reinvest the dividends, and I set it and I forget it, and I don't really pay attention much anymore. I'll look at it here and there to see how it's doing.
Mm-hmm.
I'll definitely tune in during an earnings call, but really, other than that, I'm not losing sleep on any of my investments that I've invested in. And I think that's the difference between investing and gambling. If I were gambling, I'd be all over this stuff, looking at it every day, or I'd be trading in and out of positions, or trimming profits, or adding to positions that I thought I missed out on. Otherwise, I'm just sitting, I'm not doing that.
Right.
I'm just kind of enjoying relaxing.
Right. Well, I'm going to give you another REIT type um, ETF. It's called XLRE. It's the real estate select sector spider fund. They were also talking about these on CNBC today, which
On halftime report, let me
I
guess.
think it was, yeah.
A Josh Brown pick, let me guess.
Well, no, not right, not exactly.
Josh
I
Brown
like
didn't mention it?
I like anything real estate. I'm a real estate type guy myself,
Yep.
and I do like that. Now, as far as commercial real estate is concerned, yeah, eventually it will come back, and you're probably right about that. Now, we may have some ups and downs in that, and we've changed the landscape a little bit with the Zoom, but I don't believe those skyscrapers that are in New York City and here in my hometown, Chicago, are going to stay empty. They'll figure it out how to get them back in. I mean, well, no, they will, because they're not going to let that stuff stay empty. It's just not going to happen. They'll say everything's fine. Come on in. I mean, they'll do whatever they got to say. I mean, that's what politicians do. They say what they have to say at the moment in order to get the control over people. They got you to get out of there. They'll get you back in. Whether it's, $2,000, we'll give you $2,000 if you take the vaccine, and you go, oh, sure. Okay. Oh, by the way, I got it, or whatever, I just think that, I don't know what's going on with this Delta variant that they're talking about. And it seems to be kind of keeping the market at a little bit of a bay right now. Like, are they going to shut us down again or what? I don't think they will. Sydney, Australia, shut down for 2 weeks. Now, I don't know if that was because what China's doing to them or not, but I do, I'm a short-term bull right now. And because I like to play options and stuff like that, I'm a short-term bull. But I'm going to probably my eye right now is all on the bonds. I used to get in little spats with Marco about the bond market. And he never, I used to say that the bond market is smarter than the stock market. And he said, well, and his excuse was, how can you say that when the stock market is so harder to, predict, and that the bond market doesn't really have a lot, there's so many different stocks to worry about, and there's so many different sectors, whereas the bond market is the bond market, but I'm keeping an eye on the bond market. It's always been something that I was taught early on to watch, because I do believe the bond market gives you signals of what may happen later on. I'm serious about that. And trust me, I know this, that a bond market will do that. So I'm watching the 10-year, and I'm watching right now where it seems to be flattening a little bit.
If you're trading options, I would hope you're looking at rates, right? Because that will be part of the puzzle, just like the VIX.
Correct. Yeah.
Most of the indexes that you're looking at, definitely, like, you must have a watch list up when you trade options, right?
Yeah.
So you have
the SPY, and
exactly.
That's basically what I trade in and out. Sometimes I'll do a long term. I'll do I'll just play it for the day and think that it's, like today I actually played it to the downside in the morning, and I was right on it that it was going to come down, and it did start trickling down toward the end of the day, and then it started to come back. So, but I don't play this all the time. I only play this when I'm home. And, today I happen to be off because we had a lot of storms in the area.
It's not your full-time job.
No, it's strictly a hobby for me. And, I can tell you that that's not something I, just do.
Would you consider it gambling?
I would consider it gambling. Yes, I would. I mean, yes, I definitely would consider it gambling. Speaking of gambling,
go ahead.
Do you see what's going on with these meme stocks are back again? And there is so much I think there's so much gambling going on in the market right now. I believe the market is totally gambling right now. I do. I mean, and a lot of some of the tech sector, and if you're looking at some of these stocks, I mean, I'm not talking about the FANG stocks. I'm not talking about those. I'm not talking about the Googles of the world, the Amazons of the world.
You're not talking about quality tech stocks.
No, I am not talking about quality. I'm not talking about quality text. And NVIDIA, I think NVIDIA, I own a little NVIDIA and I bought it at 600 and it's now at 800. Now I know the split's coming up and I know that's why it was going to run up.
Sure.
Because of the split. So
which is a shame that is a reason. There should be a better reason why it's running. And I think the reason why maybe the market is applauding is because, you know, they are able to do a split. And I think that's kind of like a pat on the back, kind of, you know, it has nothing to do with value.
I know it doesn't.
But
That's the problem.
I think they are, I think just like Tesla or most companies that are splitting like Apple, I don't think
I could see Apple as a split. I never saw Tesla as a split. That was just a pure scam. And putting Tesla in the S&P was another scam. Elon Musk to me is a scam. I like him in the space era.
How you feel about Tesla. The new podcast list. You like him as a person.
I like him as an engineer in the space industry.
Yeah, you think Tesla
horrible as a car manufacturer. Horrible.
And you think Tesla is overvalued?
Overvalued. It's probably it's trading at 700 for PE. I mean, it's ridiculous.
I actually don't disagree with you on this, although I'm a bull on like growth companies. I'm just saying
this one already grew 10 years. And the stock's already 10 years out. It's 10 years pulled forward. How's that sound?
What if somebody told you, you know, it's the stock market's a voting machine in the beginning, and of course it turns into a weighing machine. So maybe this is people just voting up Tesla shares as if it's going, they feel that they can see Elon's vision that this could be something big. So they're speculating, and therefore, you know, in the future, they're going to have to prove themselves.
Well, they're going to have to sell. You're trading at twice the size of Toyota. You're actually trading at 3 times the size of Boeing.
Right.
It's a car company, man. I don't give a crap what they say. It's a car company that has a lot of technology on a car that should not probably have that much technology. It runs on a battery.
But would you agree that
if they ever find a way, and I asked my son-in-law this, I said, why is it that an EV cannot recharge itself like an alternator that we have in our cars? And you know what he said? You could never put enough energy into it because so much energy comes out of it immediately. There's no way you're like, for instance, in a car, I charge my battery at 14 amps. I've got the radio, I've got certain thing, you know, the lights on or whatever. So I'm not sucking up a lot of juice out of that particular battery. So it's easy to replace that charge. Okay. Yeah. But you can never recharge. You can never have a rechargeable electric car because there is so much that's drawn off of that battery. You could never replace it immediately by having an alternator that would actually charge it. So, go ahead.
But you're not answering my question.
Mm-hmm. Oh, what was the question? I'm sorry.
Is the stock market a voting machine in the beginning, and does it become a weighing machine later on? Because I agree with you, Tesla's overvalued on the book, and they probably are overvalued fundamentally, but why are people voting that Tesla is going to be a $1 trillion company? Is it a $1 trillion company? I don't think it is.
No, it's
because, I think it's a $700 billion company, right?
Elon Musk has made his members he's got a cult-like following.
So are you saying these are retail investors that are voting?
Oh, absolutely. Absolutely. There's no doubt. There are institutional. The only reason why you've got institutions in this thing is because it's in the S&P. That's the only reason. They have to buy it. They have to.
Wood was buying it a long time ago.
If you're buying if you're buying the SPY, you're buying Tesla. So if you go into the S&P and just
why was Cathie Wood buying it before it made this dramatic run?
She could see that. I could see stuff too.
I'm just playing devil's advocate because
it would be just like saying you see AMC go all the way to $60
Well,
$70, $80 a share.
AMC's not even I don't even know the market cap, but we're
Tesla's a
talking
meme.
pennies.
I know.
AMC, what's the market cap of AMC and GameStop together?
Oh, they're
Dude.
huge. They're huge.
Yeah, so all I was trying to get at is like, I actually agree with you. I was just playing devil's advocate.
I know you were.
I don't understand Tesla. I don't want to understand Tesla. I don't own Tesla other than it's in my index fund, you know.
Now, if
I don't.
I would own it if it gets down to $200 a share.
$2 a share.
200.
Oh, 200.
If it gets down to a market value of about maybe $100 million, yeah, I'd probably take a shot at it. So
For a trade,
right.
What if it just pumped up again?
That's great. It's nothing but a trading vehicle at this point. It's you buy calls in it. People are buying options in it as opposed.
Right.
That's all. They're buying
Right.
options in it. They're playing the options market in it, and institutions are going in and out of it as you know. It's nothing but a moment. It's got nothing to do with their fundamentals. Their fundamentals are horrible. If it wasn't for the credits that they get and the subsidies they get, they wouldn't make a dime on it. There's no way. They don't make any money on their products. None. After you take out operating margin,
I don't.
None.
Yeah,
They make nothing.
I don't follow the stock for this reason. It's too controversial.
Yep.
It's not.
Right.
I don't understand cars growing up. So I'm just not a car guy, but you know, I cheer them on. I would hope that they would be competitive against China, because I really
that's probably their worst. You got to understand something. NIO in the electric car business is China's like number one. They're not going to let Tesla overtake them. There's no way. And because they're not going to let Tesla, and now that GM and Ford are starting to get on board, and like Germany, Volkswagen is not going to let Tesla be the, if you see, they're all testing the waters. Tesla made them get into the EV market because they said, whoa, wow, there's such a market. Wow, we need to get in on that. So that's exactly what happened.
But if I'm buying an EV car, why would I would probably prefer to go all in and go and buy a Tesla. Why would I buy a GM? Because
first of all, GM does not have to build new factories to
Are you saying it would be cheaper for a consumer like me to buy a GM EV?
If you think that EVs are going to be gone in the next 2 years, you buy GM. Because GM can turn the spigot on and off anytime they want. If demand is not there for EVs in the next couple of years, and we don't know that. Yes, it's picked up, but it's still only like 3% of the market. So if it doesn't if you don't see that market share get up to 10, 15%, it's just nothing but a luxury automobile. GM and Ford can turn that spigot off. Tesla cannot. Tesla's all in. Either at this price, you're saying at the price that they're at right now, you have their market cap is $700 billion.
Right.
Twice, almost 3 times that of Toyota, who sells tens of millions of cars.
I can't have a debate with you
and
on
cars
Tesla because I don't follow the stock.
Right. Well,
I can tell you that the reason Tesla has run, I don't know either, but I do truly believe that there's a reason why it's a $700 billion stock, and I haven't been able to figure this out in years why it is.
If you can't figure it out, then it ain't worth buying.
Yeah, so I don't own it.
So I like everything. I think we're not going to get into your portfolio right now. I love everything you do.
You can if you want. It doesn't matter to me.
I think a lot of what you've got should a lot of young people have. You're the type of investor that wants to see little tiny base hits. You're not in it to trade it. You're in it to own it. And you're in it to own it for the long period. And that is what makes you a good type of investor that 10 years from now, that you will have all this wealth that will help you through retirement, help you have a family, and help you have everything. To sit there and say, I'm going to be buying AMCs and game stocks and all these meme stocks and say, well, I just put 100 grand into AMC only to watch your 100 grand wake up one morning and half of it's gone. And it can happen that quick. But you know that what you own will not drop that much. I
could see if you were Roaring Kitty and you were buying GameStop at like $4 a share, that
right.
he came up with a thesis of why this is a deep quote effing value play, and he explained why, and he actually was correct. Now nobody knew it would be this phenomenon and it would grow to this crazy cult-like following. So he lucked out, but he did buy it at a lower price than what it probably is valued today.
Yeah.
So I still think that it's okay to do your research and like really have high conviction on, like, even if it's a name like AMC. Now, but what I'm trying to say is, when there was a COVID sell-off in March, that's when you should have been buying AMC before
Roaring Kitty.
Like, well, yeah, it should have been a value play. Like AMC was a value play. It's not a value
play. The business model has continued to not work anymore. Streaming, nobody's going to go back. But it'll never go back.
But this doesn't matter. This AMC will still stay in business no matter what. No matter what. It doesn't mean it's a good company. It doesn't mean it's going to make a lot of money. But what's happening is when something goes in the other directions, like the stocks are going up very high, down very low. So when they over exaggerate on these moves, that's when you're going to see value. There was value in AMC when it was March of 2020. I guarantee it, in business or not.
Oh yeah, right. There was value at $1 a share or $2 a share. There was value. You're right.
I'm looking now. AMC, and at in March 20, it was $2 a share.
Correct.
So why would you not have been a contrarian investor and say, you know what? I don't know if
even if I double my money.
Exactly.
I know. I agree with that part of it, but it has not doubled. It's gone up what, 3,000% or 2,000%? That's crazy. Because now you're taking the stock back to 1990 days. When everybody went to the movies. So what you're saying is, I guess you're saying that streaming technology is going away and everybody's going to go to the movies. Is that what you're telling me? At this price?
No, but I think that at March's price, that it was a steal.
At March's, I will agree with you. Yes, at March's price, it was a steal. Now,
I mean,
it's not. Now it's not worth $56 a share.
In March,
it's not worth 15 either.
And that's okay. In March 2020, I was buying Union Pacific Railroad. So I got unlucky because I only went up 100% from the March 20. I bought it on March 23rd, 2020. Mm-hmm. So Union Pacific Railroad only went up 100%.
Right.
I could have gotten lucky. It could have went up.
You could have gotten
1350. Yeah, it could have gone up 1,000%.
I like that word to use. Lucky. You weren't lucky.
What are the odds that you bought AMC
well, you weren't lucky
in March 2020?
That's
what I'm talking about.
You weren't lucky at Union Pacific. That model never goes away. Railroads are never going to go away. Theaters will eventually. There'll be something in those.
That I don't know, but
there won't be enough.
I'm happy.
People.
Look, I don't own AMC.
No.
I would own Netflix over AMC.
Absolutely.
I understand the theme of streaming and stay at home and technology.
Right.
But what I'm saying is,
no, I know it. I kind of know.
You should have bought AMC in March 2020 when it was $2 a share. That's what I'm trying to say.
You should have put at least you could have put 100 shares. What's $200?
Yeah. Do you want to be a value? Do you want to understand value and buy things at a value, or do you want to buy it when it's already run 500%, 1,000%?
Right
Because
now,
then you're gambling.
right,
You're either an investor or you're a gambler.
that's correct.
So yes, and at the end of the day, AMC is a market cap of 30 billion. It's probably worth 3 billion.
Correct.
Okay, so I'm not disagreeing with you, but even at $30 billion of market cap, it's not important to me.
No,
It's not important to me. I personally, the meme stocks, they can have their own little fun.
they can go to the moon.
Reddit, well, they can go to the moon. Wall Street Bets, they can trade in and out of that all I want. I'm only trying to invest in the long term. So something like this to me is a sideshow.
Right.
So, and I cheer them on, and eventually those younger investors are going to learn that they were just gambling, and that if they would have just bought and hold quality companies, they would be rich.
You're right. You're 110% right. I wish we could get that message that you just said out to everyone.
Well, they have to realize it the hard way. They can't hear it from us.
They're going to hear it.
They're going to hear it, but it's not going to go through them until they experience it and they lose the money.
That is correct. That is 100%.
And then when they pull up a stock chart of Nvidia,
yes,
and see, oh my God, if I would have bought it in 2015 when I did at $100 a share,
right,
and I would have held till today,
a real company,
I would
with real business, with a real future.
So
You've broken up.
yeah, so
You're back.
yeah, my internet's not great here,
You're
but
back.
so anyway, sorry for going on a rant, but
That's okay.
I think my point is that the buy and hold investor, unless you're a professional, or you have admitted you're doing this as a hobby. You play options as a hobby.
Absolutely. I do the
and Marco has earned his CFA.
Mm-hmm.
He has gone to school. He has probably put blood, sweat, and tears into
yes, he has.
license. Okay, it's his full-time job.
Correct.
Okay, if that isn't you, then you're going to realize that you should have just bought and held good companies and diversified.
You're right. Absolutely.
So
absolutely.
Hey, well, I used to trade. I get it.
I know. I get it. I get it too. Absolutely. Well, where do you think? Do you think that we're going to get an infrastructure bill here, or not?
I don't know, but I can tell you that it wouldn't make a difference to me.
Yeah.
In terms of
well, would it make a difference to you? Would it make a difference to you as far as investing is concerned? Because there are companies that would benefit, maybe such like
Caterpillar.
Yeah. What about Vulcan Materials, cement, stuff like that?
Yeah, sure. Some of them are okay.
Steel.
Nucor is okay, I guess.
Nucor, U.S. Steel, ticker X.
Yeah, but who makes still all that money that those industrial companies need to buy applications and SAP systems for our technology companies anyway. So right. I still think technology is the way to, if you're a younger investor and you're long-term minded, still think you need to be in technology, no matter an industrial, no matter what happens in politics or like an industrial.
Well, they pretty much run the show anyways. It's not, between the social media companies, between the Googles of the world, between the NVIDIAs of the world, between the AMDs of the world, between the Microsofts of the world, they are the juggernauts of the industry, that are the Apple of the world. Those companies, those are all companies that, in a downturn now, if you see a 10%, downturn in the market, the first thing I would be buying is Apple. The first thing I'd be buying is Microsoft. You're just picking at them a little bit. Mm-hmm. And that's what I would do in it. I mean, not that they will not be coming down the hardest. It'll be the Teslas of the world that come down the hardest. It'll be the AMC. It'll be the GameStops that come down the hardest. Those stocks will get annihilated. And that's because they're so overvalued. anything close to value, such as Microsoft or whatever, those stuff. I like the banks now. I think I'm not a fan of the banks, but I just think that, I'm not a fan of the Fed, to be honest with you. I think the Fed has completely blown this thing up, but it's a party right now. And, you have to ride the wave. If you walk in and the party's still going, you're going to have to buy a few drinks. All right.
Yeah, and for all I know, the party just started on Wall Street. And that tells me, or the reason I say that is because of, these dividend increases and these big buybacks, and
Well,
CNB said
those are not good for the world, though. That's not good for the economy. When a company is buying back their stock, all it's good for is the stock. It's not good for the economy. What you want companies to do is to reinvest their profits into growing their business and hiring more people in order to grow their business. That's true growth. Not buybacks are not
true. But what are you going to say, that Tim Cook shouldn't be doing buybacks? Because he has been for the last decade. And let me tell you another thing about Apple. Those buyback programs are so sophisticated in terms of their float, I'm sure, that it has created the value of what Apple has been able to do.
Well, yes.
And so you can't dismiss buybacks just by saying that they're shit. And
I'm not saying everything. I'm just saying that we do like to see CapEx.
Part of it, you're trying to say, it is artificial.
What's that?
Part of it is artificial buybacks. Yes. Yeah, I'm agreeing with you that the idea of buybacks are artificial.
Okay.
But in terms of Apple, it hasn't really been that artificial. You know what I mean?
No,
in terms of, and the reason banks look so bad when they do buybacks is because you're right. It isn't giving back to society or the economy, really. It's just
giving back to the shareholders.
Decreasing their float, right?
Correct. Right.
Yeah. So in that case, yes, I agree. But oh my God, are you kidding me?
Yeah.
I guarantee if you would have owned Morgan Stanley,
oh yeah,
for the last 5 years,
yes,
and you saw that dividend increase yesterday,
that
would have been an endorphin release, the same you get when you hit a big options trade.
No doubt about it.
When that came across the ticker and said Goldman Sachs is increasing their dividend by a large percent,
it was like,
I mean, this is no joke. This is like
it was like a 5% increase.
No, Bank of America was I thought it was like a 12% increase.
It wasn't quite that much. I believe it was like a 5% increase, but the other ones only went up like a little, like 2% and 3%.
Okay, I thought it went up more than that.
I believe it was 5%. Let me look here real quick before we end the show here. Let me look here.
I mean, but that's a big deal to somebody that owned that for 10 years and has been compounding those shares, and they see that when they get those dividend increase releases come across the ticker, across the news tape,
right?
That's a big deal. That's like getting a hit on an options trade. It's the same feeling, and that's the type of investing I like to do. Is I own JP Morgan and I own Bank of America, and I compound those dividends.
Right.
But I wish I had Morgan Stanley today. I wish I had
Morgan Stanley shares gained 3% after the bank said it would double its dividend. Goldman Sachs shares added 1% as the bank announced it would boost its dividend by 60%. So I am wrong. They doubled their dividend. And meanwhile, Citibank saw its shares dip 2.5% as it was only the major bank to not commit to any specific dividend increases. Citi was the only one. And they'll probably come out and say that they will because, eventually they're going to
investment.
No, you're right. So they doubled. I'm sorry, they doubled their dividend. That is huge.
And I own Blackstone. Who would have thought Blackstone would be $100 a share?
Right.
I bought it at $50 a share, and the point of buying it back then was, okay, like I need something that's steady, that's going to give me this dividend, that's kind of newer to Wall Street in terms of the big BlackRocks and the JP Morgans.
Right.
I understood them a little bit more. They're not a bank.
Right.
People misunderstand what Blackstone does. So, something like that, now it's $100 a share. Who would have thought?
Right.
I wouldn't have, that could have taken 5 years to get to
Correct.
$100 a share. You know what I mean? So
Well,
I like the financials, and I'm a tech growth guy. I'm a hyper growth guy. DraftKings is 5% of my portfolio. I like to take risks. I like to speculate on hyper growth stocks. I like the Kathy Wood stocks, DocuSign, Spotify, Roku. I like all those stocks.
right.
But I also like JP Morgan, Bank of America, Blackstone,
Sure.
Berkshire Hathaway is one of my favorite stocks,
Oh,
because
that's
it's
one of my
Japan,
favorites. Yeah, I like that.
right? Yeah.
That's like when you buy Berkshire, you're buying all the staples.
Yeah.
You're buying
yeah.
things that'll never go away, no matter what.
Well,
I
you're
don't
also
care what they
buying a
say.
lot of, and you're also buying a lot of Apple.
Yes, you are. I don't know about a lot.
I'm sure it's a big percent of his portfolio.
I don't, I'd have to look into
guarantee
that.
it's his number one holding.
Well, where Berkshire Hathaway has made all its money has been in insurance.
Oh, Geico. And,
Travelers, life insurance,
Travelers.
Geico. People are always, whoever invented the insurance business, that's incredible. Everybody's got to have it. I mean, unless you're a self-made billionaire who basically insures himself. Okay.
Yeah. And those insurance companies they're doing gangbusters right now.
Oh, they're doing absolutely incredible. There's no doubt about it. So yeah, that's another one. But real quick here before we let you go. Yeah. Insurance companies are good. Those are all good dividend payers. Also, they return a lot of money back to their shareholders. Yes, I do agree with that. I like Allstate Insurance right now. I like all the insurance companies. Stick with the big ones. I would. Those are always good plays to make. Travelers, and I like all those plays. But real quick, I think that maybe we're going to have a slow summer. We're going to have to see where the interest rates go here as far as where tech goes. Right now, it's kind of like meandering around here. I think we're going to have to see what happens in the next quarter to see exactly if these high PEs and this big multiple that we've got out there actually proves to be what they are. And we'll see what that is. I believe that they will do good. I believe that these companies are doing well. I just wish that I wish the best for America. I have my doubts, but I wish the best for America right now.
No kidding.
Yeah, I can't help myself, but I just do. But anyways,
don't ever change.
You can't.
Don't ever change.
That's right. Colin, I'd like to thank you for coming back on the show. You were a great guest. We're going to see you back on here again. I've taken over the reins, folks, as far as my producing and stuff. I have a producer and editor. Colin did all the producing and editing in the last year and a half or so. So I thank him so much, because when he gets off the air now, he can just go watch TV. He doesn't have to watch his computer run. So I understood that, and I did that for many years. And so with me taking over the show now, I'm the one doing the work. And I appreciate you folks listening. And we will see you next show. Have a happy 4th of July, my friend Colin, and we'll see you in the beer future, which I always tell people. And
the beer, folks, as in drinking beer?
As in the beer future. Gotcha. That's what they used to say. I had an old boss that told me that. See you in the beer future. I said, okay. So, folks, just remember, investing, not gambling. And we'll see you next week.